Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with my co-host James Mason. Welcome back, James. How you doing?
Todd, I'm doing well. How are you?
I'm doing well. J- James had computer problems this morning, so we're getting the show set up. And I was gonna go solo again to start off the show, and I was on time, had things rolling. I quickly got my notes organized because normally we do the show together. And James pops in, starts laughing at me. He's like, "You're not live. You're not live."
Hey, you guys should have seen it, man. He was just talking his little heart away. I mean, he was all into it, smiling, reading the comments, answering y'all. And I was like, Todd, you're not live. You're not live. He's like, what? Am I really not live? I said, no, you're not live.
What happened there? What
Oh man.
do you know why it didn't go live?
What's that?
Do you know why it didn't go live?
Oh yeah, I know why. Because you didn't click the go live button.
Oh yes. All right. Normally James sets it up. That's hilarious.
All right. So I'll be honest, I'm not prepared for the market today. Been traveling all weekend and it was a freaking nightmare.
We got a short United Airlines today or American Airlines.
Yeah, they need to be shorted. There's literally like no benefit to having first class tickets at all. Like they don't respect you or anything. I mean, it ain't even worth the conversation. It'd take forever to explain it all. But yeah, make a long story short, I ended up having to travel half the country over the last like 40 hours. I mean, it was insane. Had to take off from Dallas after getting screwed over by American Airlines, go straight to drive straight to the Atlanta airport to hunt down my daughter's her teddy bear that she can't deal without, and then take off from that point. So, man,
I was surprised when we were texting last night that the teddy bear is not being carried on the plane in her hands.
it's because of all the other stuff we have to carry. Like when we travel with Ilana, man, it's unreal. I'm talking about all the extra luggage containers, toys. I mean, everything. I mean, it's unreal. We should actually have like some kind of service of people following us.
Oh, I've one time I was coaching a women's semi-pro team of soccer, and we had to fly to Minnesota, and I had my whole family with me, and I remember, and I miscalculated the time because our tickets were based on Central Time because we were flying to Minnesota, and I thought we had a whole hour. So we're just kind of relaxing. I get a phone call from my assistant coach. He's like, "Where are you?" And I'm like, "Oh, we're here having lunch." And so next thing you know, I'm racing through the airport, dragging a piece of luggage, holding a baby on my shoulders, running through the airport, and doing my best, O.J. Simpson, trying to get to the gate. And I show up wearing a nice shirt, just pouring sweat because you're trying to move a family through the airport. It's not easy.
No, it's very tough. All right, so let's go ahead and get into it. So the Dow futures currently down 299 points. S&P 500 futures are down 42 and a half points, and the market is obviously taking a beating here. Pre-market, but with how it's kind of set up, I kind of wouldn't be surprised if we don't see like an intraday bounce here and it start to chop all around in the market. So Todd, since you were prepared, I'll go ahead and let you lead the show from here, and I'll just kind of tag along.
Yeah. So the question, I think the for me, the question, the narrative right now is in the long weekend, had a relaxing weekend around the house. Every news story was about COVID. The media is pumping this COVID. If they're not talking about COVID, they're talking about inflation. So how does COVID and how does inflation impact our market? I mean, what we do. And I think it's a real conversation that we have to think about. We've beat the COVID horse pretty hard. So I'm going to talk more about in the inflation and where we're headed. With the S&P and SPY and the futures down today, it looks like it's going to be a red day. But we had a red day on Friday. And I think we need to watch and check, see some of the big tickers where they test on Friday's lows. And if they break that, we could have another small drop in the marketplace.
Yeah, for sure. I know when I got off the flight on Friday, I looked at my portfolio, and man, especially seeing predictive oncology in there, that one for real pissed me off. To see how it sold off, and it was a freaking surprise. But I mean, I'm still long in it, holding a ton of shares. I bought 40,000 more shares the other day, and I'm really gonna just play it by ear, see how it goes, take profits and add to it. But that's just my plan. So yeah, Friday's market pullback did catch me off guard when I got off the plane. I was not expecting to open up my portfolio and to see the beating that it had. But yeah, let's go ahead and get into some of the main topics.
So one of the big news today is Microsoft bought out ATVI. They have a buyout offer for $68 billion, which works out to like $95 a share. And actually, someone even asked, let me pull up the comment. Brian's asking the comment question here. Thank you, Brian, for the $5 tip. If the buyout offer is at 95, why isn't it trading at 95 right now? And I don't know the answer to that. The ticker was halted, and I was watching it in the pre-market, and it opened up at 850, and I popped in there. It did a little dip at $88, and I picked up a few shares, a couple hundred shares, and thinking it was going to run up to 95, and it didn't. I sold at 89.50 and made a little over $100 just, but I don't understand why the buyout offer and why it's not trading there. Do you have any?
What usually happens is, okay, for instance, let me share a chart for everybody. Stand by a moment. All right, here is ticker ATVI. So we can see that on Friday it closed out at 65.39. When that buyout price is that significant, for instance, in this situation, their buyout price is at 95 and it closed out Friday at 65.39. The market makers still have to make money here. And what they'll do is they'll run it up to 95 or that buyout price as close as possible, so it can still give them range in the end to make that money. Now, sometimes you'll see it actually shoot over the buyout price, and that's really just retail FOMO traders pushing it up. It's going to come back if it does that. But it will kind of go up to that buyout price offering range and stagger out right there. So we see that pre-market high of around 93. And I wouldn't be surprised if it doesn't hold up right here and we don't have a spike up to probably the same range, maybe maybe a little bit more as we go throughout the day to that buyout price. But in the end, let's say that they were going to wrap this up in a week, which would not happen. It would take months for this buyout to wrap up. So if they keep it pegged at 93, hypothetically, we'll just go off of that pre-market high right here. If they keep it pegged around 93, in the end, the market makers will come in, and right before it's official, as long as it gets voted on by all the shareholders and approved, what will then happen is the market makers, they'll accumulate all these shares and they'll make the difference between where they have it pegged at to the actual buyout offer. So if they can keep it pegged at 93 or less, they're more than happy. Like, you guys, the way they see it is you guys can have the rest of that, but they'll buy up all the shares and they'll make that difference of $2 per share. So that's how that works. It's a long game for them, but they have nothing but time and money. So no big deal.
Those are actually two really good things to have.
Yeah. You don't have any problems if you have time and money.
That's true.
All right, so that's what we have pretty much going on with Activision right now. And if you guys remember a few weeks ago when I was talking about what I think Microsoft's plans are, like, I believe they're going to get deep into the metaverse and unveil their own social network. So that's what I'm looking forward to long term with Microsoft. I haven't looked at Microsoft's charts at today. Again, I mean, I'm not prepared for the market. But yeah, okay. So anytime the offering company makes a significant buyout offer, their stock usually dips. And that is because depending on the structure of the offer. Now, again, I'm going to say it. I'm not prepared for the market today. I've been traveling all night. But depending on how this offer is actually structured here, that will actually cause that offering company to gap down or to even trend down. And they may even trend down for a few days. So if you're trying to buy the dip right now in Microsoft, to be honest with you guys, nobody can actually tell if this is the dip just right yet or if it's going to go down more. Now, we always have to go back to those daily charts because the charts don't lie. We can see that Microsoft is downtrending, but NASDAQ is downtrending as a whole. So we just kind of have to sit back, see what this is going to do for Microsoft, and see if we can't get consolidation somewhere on this chart, to actually make an entry. The last thing we want to do is get faked out. We don't want to get faked out with a fake little bounce here and it start to go up, and then in the days to come, it just tanks. So
Microsoft's low of the day on Friday was 304. If it breaks 304 today, I think we're going to see a downtrend with it.
Yeah. And again, depending on how this offer is structured and how much money they're paying out overall, I don't know if it has shares involved into it or if it's all cash deal or whatnot. I haven't even looked, but that will play a significant role in how much Microsoft will downtrend. Now, long term, and by long term, I don't have a time frame, but long term, I am hardcore bullish on Microsoft. They literally have the entire infrastructure to build the metaverse for what I think it will end up being in the end. So that's just a quick breakdown of Activision and Microsoft.
All right. Let's go to the comments. Again, John, appreciate the news articles and updates. That's very good. John Stevenson.
Yes, I am still long and strong in POAI. I actually said that the other day. I just added 40,000 more shares. And I also showed everybody on the StockCast show.
Take a look at BBig. John Stevenson's asking about it. It's on my watch list for today. I think we're going to see a pop in BBig. And then if I recall, John, I think they just recently added options.
No, they've had options actually for a little while for BBig. Okay. Apparently everybody's trying to short squeeze this, but what a lot of people don't understand is they got different loopholes for short squeezing. Not short squeezing, but for taking their shorts now. They're not holding these shares short as long as what they were in the past, and they're not fighting against the resistance. They're actually, if anything, cutting them pretty quick and reversing. So they're making money in both directions. There was this ticker RELI. That thing had a decent little short squeeze, but then everybody kept talking like 2 weeks after its true short squeeze saying, oh, this is going to squeeze. No, guys, that squeeze is already gone. It happened. Same thing for right here. Like this thing is already, like these days right here, I can pretty much bet that this was the shorts pretty much covering right here. And then a little bit of that buying volume was everybody else. And we can see pre-market. So Friday we closed out at $4.07, and we're currently at $4.65 here pre-market. So this little hash line right here, you probably can't see, but this is actually where we are at. So our next range of resistance will be up at 531. Just keep that in mind. Now, could this squeeze and go up? Absolutely. Nobody knows. Nobody knows for sure where it will go. But don't just jump into a stock because everybody's screaming short squeeze, short squeeze. It's to the point now where all of the stocks that everybody's trying to chase to short squeeze it, they're already pulling out by the time everybody's talking about it. So in the end, all of those retail traders just end up holding bags.
Yeah, actually, I'm hoping it does squeeze or has a run up. I'm looking at it as a potential short this morning. It's on my list for a potential short play.
Oh, for sure.
Yeah. All right, Jonathan, appreciate it. Good morning. Thank you for the $5 tip. A little be big and pumping on the rumor of the Cryptide launch. We are about 5 minutes from the start of the market. We appreciate you being patient with us today. Everything is everything is a short squeeze. Stock makes a move, and yep, it's a short squeeze. I agree.
Yeah, everybody. I don't know. I'm not gonna. Todd, you and I will talk about what I was gonna say after the show. It's nothing bad. It's talking about really what retail traders are focusing on now in the market. Put it this way, guys. If you're hearing the masses of retail traders who have never been successful at trading, all talking about what the stock market is going to do, chances are the stock market is going to do the opposite of that. So that's how you need to honestly think in terms of potentially like what could happen here. Dumb money in the stock market is not controlling anything. And by the time you start to see the masses talk about what a ticker is going to do, they're probably way late to the entire show. So be big along with everything else at this point. Like the hedge funds, they're not stupid. I mean, they literally hire the smartest people to work for them, to build their algorithms and whatnot. Do they make mistakes? Absolutely. But at the end of the day, they're always going to win in the end. You just have to pick up the pieces in between. And somebody has to lose on these trades. It's not going to be the overall market makers. It's going to be the dumb money in retail. So what they like to look for is when the retail masses start to scream out like short squeeze, for, let's just say, let's go to RELI.
You're less than 3 minutes to the market.
All right, appreciate it. So what they like to look for is when retail starts to scream out like short squeeze, and this thing is already freaking short squeeze for ticker RELI. Now, if more bears decide to jump into this, and chances are it'd be retail bears, but if they try to come in and short this, and if they get squeezed out, then yeah, this thing could go up, but it's not going to make a GameStop move. That's for sure. Watch this thing make a GameStop move and make me look stupid. But yeah, they're looking for retail traders to jump in and start to scream short squeeze, because retail traders will start going long here. And at this point, if they have a long position in it, they're unloading their long position. So that's why you see all this momentum breaking down, like on the daily chart for this example in ticker RELI. And it will trade in this range. I mean, they don't care if it goes in this range. And then they'll start to take a new short position and crush that thing. So, yeah, I could have showed the chart there. This is the chart I was talking about. So, yeah, that's just a quick rundown of really what the market makers are looking for. And hopefully you guys remember that. Go against the crowd. That's my best recommendation. That's not financial advice. That's just not being dumb. All right, so let's go ahead and wrap it up right there. Todd, I appreciate you leading the show on Friday. The show was outstanding. If you guys didn't watch it, go back and watch the show on Friday. Thank you for carrying the show today, as I was unprepared. And you know what, Todd? You can go ahead and get rid of that cup. I don't know why you got my coffee mug anyways. All right, everybody. So appreciate y'all tuning in today. Remember, trade safe, trade smart, and we will catch y'all in the next one.